Alrighty, good morning, everyone, and happy Friday, April 11th, 2025. So good to have you all here for my bull market showcase. Great to have you all here. And as you've been seeing in these markets, we've been having a lot of volatility going on over the past several days and weeks, especially with a lot of things coming out in the news. Worldly changes that are happening as far as tariffs that are affecting the markets. We've been seeing some pretty drastic changes that are unlikely for what we've seen over the past couple of years, as far as some significant drops of moves that are going up 10% when the markets are going down 5% the very next day. There's a lot going on. So, how can we understand what's going on, kind of take the emotion out of it, and be able to have a system for trading? That's what I'm going to be going over today. Hi, Andrew. Good to see you. Hey, Ken. All right, let's get into it. So, to show you on this picture, tariffs halted, markets reacted to that. I'm sure everyone's keeping their pulse on what's going on in the news. Markets rallied 10%. Shortly after, the markets dropped 5%. So, I'm going to be going over the number one indicator that tells you when to sell in the markets. All right. So, just a brief kind of overview of what's been happening. If you haven't been staying in tune with the news, but these tariffs are definitely impacting the S&P, the Nasdaq, the Russell, the Dow, and many other products that we're looking at in the market. So, this happened April 1st through April 9th was when we had that pretty significant down move upon the announcement of those tariffs. And that's when we actually entered the bear market territory. Quiz question for you guys. I know it's not on here, but who knows what the technicality is of a bear market? What percentage do we need to go down in order for it to be considered a bear market? There we go. Randy knows it. Excellent. Tom, Dwayne, nice job, guys. Lon, Ken. Yeah, so we look for a move down of 20%, and we were kind of hovering around that number for a little bit, but then that tariff announcement pushed us right over the edge and took us into that 20% drop. So from people I've been talking to, kind of bringing in that fear into the markets about what's going on and really anticipating a lot of volatility moving forward. So in one sweep of about 9 days, we entered that bear market territory. The very next day, if you saw in the news, we got that 90-day pause on the tariffs. This was on April 9th, so 2 days ago. And then how the markets reacted, we went up 10%. So we go from having a bear market to then rallying 10% off of the news and that there's a pause on tariffs. And then the very next day, April 10th, which was yesterday, we drop another 5%. So being able to understand what's going on in the markets and these huge swings is probably going to be normal over the next upcoming weeks. So it's important for us to really understand what's going on and how to trade these markets, taking, again, the emotion out of it and having a system and step-by-step method for trading these markets. So if we're kind of newer to trading or we've been struggling, it might be challenging understanding how to trade these markets. What I'm going to be doing today and during my upcoming 3-day event is really giving you that map of what to look for and how to trade these markets smarter and simplified. So as we continue on, again, a lot going on in the markets, tariffs, tariff pauses, all these things. So my solution is learn how to trade smarter. So we can get sucked up in the volatility and the large price swings, or we can work on that one thing of how can we trade smarter. Trading in general, let alone when we're in a bear market, is complicated as it is. So how can we trade smarter? So what I've done is I've created 3 specific strategies that I'll be going over during the upcoming 3-day bull market bootcamp. That's going to be in 2 weeks or about a week and a half from now, but 3 specific strategies to help you maneuver these markets. Strategy number 1 is being able to identify zone trades. So when we're looking for a zone, we look for, if you've been in my previous sessions, we look for 2 candle flips, wick over wick reversals, and we want to be able to qualify the best ones to buy low, sell high, We can't just choose any zone because if we're choosing the wrong ones, we're likely going to get stopped out. So we need to be very specific and know what to look for in choosing the best zones. Another quiz question, I want to keep it interactive during this session, but how do you guys feel with the zones that you're taking? Are you confident? Are you so confident? Are you need a lot of work on them? Easy? What's the consensus? And I don't want you guys to be open right now, but it's going to help me for the upcoming 3-day boot camp as well. What's the feeling with the zones that you're trading? Thanks, Ken, for being the first one. So. All right. Anyone else want to chime in? How are your zone tradings? Hey, Dirk, let's see. Feel good, but need to understand indicators to not get stopped out. Okay, that's an important one. So we'll be going over that today a little bit. The quiz next, I think, will help. Some zones work, right? And they work for longer term. Typically, those are zones that are in the best locations. They have a lot of the odds enhancers that we look for. Other zones may even have all the criteria and look like the best zone in the world, and it still fails. So that's going to go into the main thing that I've seen with working for students over the past several years of the number one mistake that traders run into with trading. I'm going to be going over that in a little bit. Let's see. Need to work, good. Always need refinement. All right, I love it. See, always room for improvement. So we're going to be going over that. And I appreciate the honesty and the openness from you guys. See, not very good. Need to understand top-down approach. Perfect. Problem is I go directly to the trading zone, 2-minute NASDAQ. Thank you for that, Mo. So top-down approach, very important. And that's going to be the foundation that we're going to be talking about today. I tell all my students, if you know how to read a daily price chart, that is going to tremendously help you on the smaller time frames and knowing how to trade a 2-minute, a 1 hour, any time frame if you have a solid foundation of what's going on today. You're going to see that's going to be a common theme throughout today's event is if you're struggling, not having that top-down approach, understanding those indicators to not get stopped out, we need to create that system that applies all of those factors so that we're taking the guesswork out of things and understanding what to look for. So again, all of these kind of questions that you're bringing up are going to be sort of revealed throughout this session. So appreciate you guys' zones. So let's go into a quiz. And let's see how you guys do with this one. So strategy number 1, choosing zones. Why do we choose zones? Well, we want to just go back again. Strategy number 1, choosing zones. We want to buy low, sell high. As the markets are pulling back, we want to find an area where the buyers are located and we can buy with them. Markets rally up, we have a great zone. The issue comes when we're not choosing the best zones. If we're struggling and we're kind of guessing on our zones, then it's not as great of a strategy. So we're going to be solidifying each of these strategies. But let's talk about zones. I've got 2 charts in 2 different zones. The one on the left, chart A, is the Dow daily time frame. And on the right is going to be bonds daily time frame as well. 2 different charts, and how we qualify a zone is if you've been in previous sessions, it's a 2-candle flip, red candle coming down, green candle closing within the range of the green candle. We use that as a zone, or a wick over wick reversal, which is 2 red candles coming down, and then price breaks above it. So in each of these situations, we have what we consider zones in my live trading room and in the past classes that I've been doing. So 2 different charts, daily time frame. Which zone would you buy? Would you be looking to actively buy on the left chart in this 2-candle flip zone? Or would you be looking to buy on the right in this wick over wick reversal zone? Take a moment. All right, we've got 1, 2, 3, 4, 5 for B. There's 6 for B. And then what are the odds enhancers that you're bringing in for choosing that zone? I've got 1, 2, 3, 4, 5, 6, 7. 7 say B. What are you guys seeing that's making you say B? All right. Tom's saying B has a strong breakout. You bet. Over wick reversal. Patrick says I kind of like A. So B had a strong breakout. Like base, like base. All right. So you've got a zone. You've got a strong breakout. Not a lot of time in the area. Looked left. Previously breaking supply, did take out that supply to the left. Callie switching it up and saying A. So we've got kind of 1.5 to 2 for A and the rest saying B. All right, you ready for the answer? The answer of the zone of which to buy is A. All right, I got most of you guys on that one. So why is it A? B had all the criteria, right? So if I come back and we're looking at B, we have a wick over wick reversal, or however you qualify a zone. You've got a zone there. It has a strong breakout. Everything that you're saying is completely right. Not a lot of time in the area. You're looking left. Breaking supply. It has all the criteria, and yet it still gets stopped out. But this one on the left has a huge move. Let's see. James says B is a previous rally-based rally zone. Over here, possibly. But nonetheless, this is a common theme, and why I'm bringing it to the light today is that I see a lot of traders choosing zones like this, and they're kind of jumping the gun and choosing a zone, but it's actually not the best zone versus the one on the left. This one is going to be the better zone. What we're going to go into during the 3-day bull market boot camp is to really help you guys hone in on what a zone is, which one's stronger, so that when I'm giving you these questions of which one are you going to choose to buy, you're going to not say B, you're going to actually say A, and there's very specific reasons why. So this can be the event, the one key signal to buy and sell. And a hint to this is that not all 2-candle flips are the same. So this one's a 2-candle flip. That's a wick over wick reversal. We use them interchangeably, but they're not all the same. So how we qualify it is going to be very important for deciding whether to take that as a zone or to use this one on the left. Just something to think about. All right, let's keep it moving. So strategy number 1 is really refining zones. And since a couple of us kind of struggle with that one, I think this is going to be an important one to discuss and go over so we know how to trade these markets and understand which zones are we taking and which ones are we going to pass on, because we need to understand the difference and be confident in our answers. So great job, Callie, on that one. And Patrick, you guys kind of saw the difference a little bit. Strategy number 2, breakouts. Okay, so how to trade smarter. We got to know when to take zone trades. Number 2 is we got to know when to take a breakout trade. So breakout trades are best when we can get in on big moves after a reversal pattern. So we're looking for that breakout. We're looking for a lot of momentum. Everyone who's here, how many of you guys take breakout trades? And do you like them? Do you hate them? I know many traders that I've worked with that will not take a breakout trade just because it tends to go against some of them. But other people like it. So what do you guys think? You guys like breakout trades? Not a fan? What's the consensus? James likes it. Let's see. Dwayne does. Callie. Patrick, you stopped doing the breakout trades? So I'll be helping with that. Can I maybe get you back into the breakout trades? Me too, Dirk. Love momentum. Unpredictable. Great answer there, right? So how many of us have been there where we're trying to take a breakout trade and we're in, it's working for a little bit, but then it starts to pull back and it's going against us and we're starting to turn negative and it wasn't a long running breakout trade. Sometimes look forward to it. Yeah, I like them, but quite often the retracement is unpredictable. Yeah, exactly what I was just mentioning. Yeah, so that's where I find a lot of students struggle with the breakout trades is because where we're taking the breakouts, it's important that we're looking at very specific locations. And I know some of us in the past may say, well, I take a breakout trade when I have maybe 2 touches of resistance or 3 touches or 4 touches, or we start to put numbers on it. But we really can't do that because a lot of those breakouts, if you've tried some of those strategies, don't work. So I'm going to be bringing to light when to take a breakout and when not to take a breakout. Yeah, Mark, don't work for you. And I get that, So that's why I'm bringing that into this event is to go into what breakouts tend to work versus which ones don't work all the time. Yeah. So kind of 2 situations, breakout trades. And I've felt when I've been working with students in coaching sessions that this hasn't been touched upon enough as far as breakout trades that work, which ones actually give us those long running moves, and which ones maybe pop up a little bit and then go against us. There's very specific information on the price charts if you've back tested this to see the difference and when to anticipate a strong breakout and when it's going to be a short-lived breakout and then a pullback. So let's see how you guys do on this quiz then. Strategy number 2, breakouts. Which breakout trade would you buy? So on the left, I've gone down to the smaller time frames. I'm going to be bringing in more of the lower time frames because I know a lot of us like those. So the one on the left is Canadian dollar, 1 hour time frame. Would you take a breakout there? Or B on copper, 15-minute time frame. Would you take a breakout there? I'll give you guys a minute here. Which breakout trade would you buy? So if you're going to go long, are you going to go long on A, Canadian dollar breakout, or are you going to go long on B, breakout to the upside? Let's say we've got 1, 2, 3 for A. Oh, I can draw. That's right. Let me tally it up right now. I'll tally it up on the top. So we've got A, we have a B, we have another A, Mo says A, Ken says B, Callie says A, Andrew says A, Dirk says A. Like both of them, Mark? I'll do one for each for you. A and B. James says looks like B is downtrending. Okay, bringing in trend there. All right, so the consensus seems to be A. And now why are you guys choosing A? What's your reason that A stands out to you for the breakout trade? Got 1, 2, 3, 4. It's almost twice the amount of people said A. James says it's been tested 5 times. Okay, let's see. I see there, 1, 2, 3, 4, something like that. Less overhead supply. All right. More dynamic. I like that, Andrew, kind of seeing that down, up, down, up, down, up. 3 touches, 5 touches, more basing. See, Dirk says B is in more of a downtrend and it's a rise base drop, like rally base drop on the higher time frame. Great. So bringing in those fractals of, what would this look like on a higher time frame? Excellent. All right, so we're thinking A. Ready for the answer? The answer is B. And I got some of you guys again on this one, right? It's easy to mess these up. So A broke out a little bit and then fell against us and went all the way back down. Not a great breakout trade. Wah, wah. Yeah, sad face on that one. B, however, broke out, did not go against us. So if we're looking at the charts, and there's some charts that have a breakout that fails, and then there's ones that have a huge momentum wave, then there's got to be two very different reasons why. So that's the question, Andrew. How can you predict B? So what I'll say is regarding A, I want you guys, and this might be hard to do, but I want you guys to kind of remove, um, maybe not. I would say if you think it's based on the number of touches, like 3 touches, 4 touches, 5 touches, it's not going to be about that as much for the breakout if you're looking for a long-lived one. That can be a good strategy if you're just looking for kind of trend at that point. So, there were a lot of touches and we broke out, but it did go against us. So, maybe it continued going higher. But if we're looking to get in on a breakout, that's not the best place to enter a trade is on the touches versus B. Getting in here, we had just one touch, huge breakout. So maybe it's not about the number of touches, maybe it's about something else. Absolutely, Richard. Yeah. Same time frame. I mean, these could be any time frame. So we could even put let me come back. Honestly, time frame really doesn't matter. If I put an X on these, it's going to be the same thing and you're going to trade them the exact same way. I think that's a misconception about the time frames is that people think um, that it really matters as far as, kind of the trades you're taking. At the end of the day, it's how you read the price chart. So why is this picture different than this one? And we're going to be going over that during the event, but it has to do with the location. So even though this looks like it's breaking out to the upside, the location of what's happening down here in that pullback is actually going to be very different than this one, which is more of a shallow pullback. This is a larger pullback. This is a shallow one. James says the gap, not the gap. I'll give you a hint. I don't want to give too much away because it's going to open up more questions, but it has to do with the location and how close it is to your zone. So strategy number one was identifying our zones. On the one on the left, our 2 candle flip zone is down here. So notice on the breakout, if our zone is down here, we're taking a breakout very far away from our zone. So if we're trying to go long here on a breakout, well, that's fine, but we got to be ready for the fact that price can come all the way back against us. Whereas this one over here, where's our zone located? Kind of see the difference there? Yeah, it's just a little sneak peek, but again, these little things, when you start to incorporate them, you're going to realize it's not about the number of touches. I mean, it could be 20 touches and it can still do this exact same thing where it goes up and then down. It's really about location. And again, I'm going to be building your confidence over the next couple weeks in the upcoming event. All right, number 3 is a new one based on many of your requests, which I'm excited about, and it's going to be options. So why options? So a lot of us choose zones, a lot of us trade breakouts, but options are amazing in these markets right now. Why is that? Because the option premiums are so huge right now. They are completely inflated based on how volatile the markets get. When we see these big moves in the markets where we're rallying 10% and dropping 5%, those options tend to inflate significantly. So keeping that in mind, why don't we sell options to collect those larger premiums? The markets can't be whipsaw every single day. It's going to calm down and kind of consolidate at a certain point. So high volatility means big premiums. And you don't need to be specific with your zones. So zones, you need to be specific. Breakout trades, you need to be specific. Options, you have a little bit more leeway. You don't have to be as specific with your entries and your zones. What you will want to incorporate is understanding the market volatility. How many of you guys trade options? Options have wheel strategy. I don't know that strategy, Mo. I probably would if you explained it, but I don't know the term. Occasionally, Nancy does, Dirk does. Anyone else? Again, this is a new one, so I wanted to bring it into this event because I haven't taught it yet. But a lot of you guys were requesting it. Want to learn? All right. I love it. I'm going to try to give you again the simplest, learn how to trade smarter strategy so that we're not overcomplicating things. Options, again, just like anything else, you can overcomplicate it to the moon and back, but my goal is to simplify it and give you those tools of how to trade options in the simplest way. So love it, learning. Let's go to the quiz question. Strategy number 3, options. So even if you don't trade options, or maybe just take a guess. So same time frame. We have on the left gold weekly time frame. On the right, we have natural gas weekly time frame. So both weekly time frames, both futures products. Which chart is best to sell out of the money call options? I'll give you guys a couple more minutes to think about this one. A or B, which chart is best to sell out of the money call options? Let's see. Hey, Richard, do you have an indicator to say whether options are cheap versus expensive? Good question. Let me look into that. I don't. I might be able to create one for the event. Let me write that down. That's a great question. I'll give you the tools. I'll see if I can create an indicator. I've been working on creating some. So if you guys are interested in indicators, definitely let me know as well. Indicator, cheap versus expensive. Thanks, Richard. Great question. All right. Yeah, the VIX is a good one. That's going to be the main one. Thanks, Chuck. I'll see if there's something else, though. All right, we've got 4 people saying B. Anyone else want to take a guess? Which chart is best to sell out of the money call options? So we're thinking B. So if we're selling call options, just to kind of explain this, if we're selling a call option, we want to sell an out of the money call option where price is likely not going to get to. So I would sell a call option out of the money on gold if it came above 3,200. Or I would sell a call option on natural gas, maybe if it came above close to that $5 mark. So the difference between the two, which one is the best to sell out of the money call options? Anyone want to chime in as far as why they're saying B? Why is B the better one? You guys are right on this one. So a couple things that we'll incorporate. See, Dirk says the wick over wick. This right here. Less likely to get assigned. And why is that? We've got the wick over wick. Why would we be less likely to get assigned on B? Well, A is in a, what's the trend? What's gold been in? Gold is in and has been in a uptrend. There you go. More stable price. Yeah, so gold's been in a huge uptrend. So if we're selling a call option when the markets are dropping, we're trying to sell a call option up here, those call options are not going to have that high of a premium. Why? Because the markets are dropping. That means the puts would actually be better to sell. So A would be we would sell a out of the money put option because we're in an uptrend. Maybe we could sell a out of the money put option, maybe below that 2 candle flip. So what that does is this drop that we're seeing, I'm not sure what the percentage was down here, but when the markets are dropping, the put values premiums increase. When the markets are rallying, the call option premiums are increasing. So when it comes to B, you can see that we had been rallying on natural gas. So when we're rallying, the call options, the premiums are going to be higher when the markets are rallying. So kind of think of that correlation. And what's working in our favor? Natural gas was in an uptrend. However, what do we have at the top of this move that would help us with selling those call options? This goes back to the basics of we've got resistance. What is it called when we have resistance, break above, and then a 2 candle flip? There we go. Thank you, Dwayne. That's our fake out breakout. We have a 2 candle flip there. So now we have a 2 candle flip. That's a reversal signal. That's telling us we should be looking to go short. So why not sell a call option on a rally to collect the most premium from it? So great job on that one, guys. So the answer, so you can see, is going to be B. If we had done it on gold, we likely would have been stopped out, depending on how we managed our risk on that one. But gold came back, shot up from there. If we sold the call option on natural gas, you can see that green candle, we rallied up into the wick over wick that Dirk mentioned, and then fell from there. Ooh, good question, Richard. How far out days to expiration do you normally use when you sell options? So we're going to go over that regarding today's market conditions. So with the markets rallying and dropping 5% to 10%, we can actually go further out. And that's the beauty of options, is that if we're trying to use options and choose strike prices that are really close to price, choosing in here or in here, we can get stopped out so easily. And that's fine. We can do that strategy when the markets are calm, but you see what's going on in the news. The markets are crazy right now, a lot of volatility. So we're seeing these huge moves. How we can benefit from that is that those huge moves means that the premiums are getting so inflated that we can go further out. So how far out do you go? As far out as possible as you can, I would say, and still get a good premium. As far as days to expiration, we'll go over a couple strategies. The ones that I like the most are 0 days to expiration. So when you get good at identifying the 2 candle flips and qualifying your zones, you can do the same day, an option that expires the same day, sell a call option that expires that day above or below the 2 candle flip, collect the premium. That way you're not choosing a zone, you're not choosing an entry point. You're just saying, I want to sell premium, collect maybe a couple $100, 500, whatever that may be. And you're using the foundation of the 2 candle flip, the zone. So that's where all of these work together. The 0 days to expiration, perfect. Yeah, let me know if you guys are interested in that. There's the 0 day strategy, and then there's also, I'll go a little bit further out depending on how expensive these premiums are and how much we can get from them. Because if we can go 7 days out and get a large premium from those when the markets are down 10%, you don't need to hold it for 7 days. I think that's a misconception about those longer days to expiration, is that you need to hold it for the whole time, but you don't. You can do a 7 days to expiration, hold it for a couple hours, close the trade, and that way you're going to get more premium from that. So When we combine the three strategies, this gives you a whole picture of how to trade the markets from again, a holistic standpoint. So zones are best when we want to buy low, sell high. We want to qualify them. So how we qualify them, we're going to go over that as far as the odds enhancers that we look for and how to identify the strongest zones. So again, that goes back to the first one most of us got wrong. Remember, going back to the start of our session, this 2 candle flip, we were choosing this zone. If you chose this one, that was the wrong zone. Again, we'll go over all that, but not all 2 candle flips are the same. The breakout trades, when we want to get those big moves, you see those are also not all the same because some breakouts are long running, some breakouts are short-lived. So being able to see the difference is going to help you build your confidence taking breakout trades. I know a lot of us maybe took them in the past and stopped because you're uncomfortable, you've seen it go against you. All I'm saying is that if you've taken breakout trades and they've gone against you and it's scarred you a little bit, it's just you're not putting them in the right location, and I'm going to help you through that during the upcoming event. And then the other strategy, which applies to what's going on today in these markets, is market volatility. How you can kind of get a glimpse of that is just by, nice, we're up $1,500 on that one bond trade that we set up. That's great. So how you can kind of get a feel for when you should be trading options, and we'll go over this during the boot camp, is just to see how much price is up. So if I come to the S&P, let me remove that order, you can see we're down 0.5%. Now, compared to how the markets have been the past couple days, that's not really a whole lot. So if we're down 0.5%, what do you guys think the premiums are going to be? Do you think they're going to be very inflated compared to what they've been, or do you think they're going to be a little bit on the lighter side? What do you think? The S&P is down 0.36%. Do you think those premiums are going to be really inflated or not so much? Yeah, Dirk says lighter side. Exactly. So when you see those days where it's all over the news and you log into your computer and you see markets down 5%, down 10%, up 10%, I want you guys to be excited about that because you can think about the option strategies that you can take. Nancy has a comment in the chat, not naked trades, I hope. So never naked options. As far as we're always going to cap our risk. Now, what we're going to do during the 3-day event, let me show you. Let me do one that's a little simpler to see. So if we're going back to this day where we had the 2 candle flip here, kind of putting the pieces together to do the option strategy on that day is the 2 candle flip tells us to look to go long. We could take a long trade and be directional, or we could take a options trade, sell a put option below the low wick of that green candle. So the low wick of that green candle is 66.09. We would sell a option or a put option below 66.09, probably $66 to keep it even. Collect the premium out of it, maybe a couple $100 on that. And it's not going to be naked, so you're going to sell the put option, but then how we cover it is with a premium stop. Has anyone done that before, a premium stop? It's where you sell the option, say you got maybe $200 out of that on, say, one option. You could put a stop at $400 so that you're selling the option, you collect 200, you put your stop based on if the option value gets to a certain point. Awesome. Anyone else interested in learning that? Again, I'm kind of using this session to to see what else to include during the event, so let me know as well. Yeah, it's a great one. So why I love options? Yeah, absolutely. So if I'm looking at this 2 candle flip, let me just come back. Say we were on this day here. Now I see a red candle, a green candle, a 2 candle flip. Now I could spend half an hour, trying to find a zone here, maybe a zone in this 2 candle flip or this one, trying to figure out, should I take the breakout trade? Try to figure that and spend all that time doing that. Or what I can do is, once that 2 candle flip breaks out to the upside, so once it starts to move higher, that means the 2 candle flip is underway and we're getting that move to the upside. Instead of trying to pick out your zone and your entry price and your stop price, all you'll do is you'll sell a put option below the low wick of the green candle, and it's going to be the 0 days to expiration. Thanks, Chuck. Trading options, Tasty Trade is the best in my opinion. I appreciate that. Thinkorswim is kind of finicky actually, so I appreciate the feedback. So yeah, sell a put option, strike price. You agree, Nancy? Sell it at a strike price below the 2 candle flip. So that would be $66. Collect the premium. Say we get $200 out of it. And then we'll put our stop at $400. That means we collect 200. If we're willing to get stopped out, if the premium reaches 400, then it's just the difference between what we collected and when we get stopped out. So we collect that $200 for selling the put option. It's 0 days to expiration. So as long as price doesn't go below $66 at the end of the day, we've made the $200. You can do 1 contract, 2 contracts, 3 contracts. And you can see the next day when we broke that 2 candle flip, price never came back below that low wick. We collected the premium, 0 days to expiration. And if you know the Greeks, theta is a good one where it's time decay. Time is going to be decreasing because it's 0 days to expiration. So the premium is shrinking so fast, and you've picked a strike price that's a good location based on the 2 candle flip. And then you can do 1 contract or several contracts. And just keeping it simple for today's session, just using those 2 candle flips, putting your strike price below the 2 candle flip, you can see a lot of times it ends up working pretty well. All right. So those are all the strategies. We did that one. Let's see. All right. So I mentioned this before. We've got another chart here. If you've been watching gold, you might know the answer to this one, but here's a chart of gold, daily time frame zone. Here I have a 2 candle flip zone. Is this a place I would buy or sell? This is a 2-part question. Would you buy or sell here? And then as a bonus, can anyone tell me what the #1 reason why traders fail is? It's going to tie in with this chart here. So 2 questions. First, let me know, would you buy or sell or neither? And then can anyone take that and maybe figure out what the #1 reason traders fail is? Yeah, I use Thinkorswim, Richard. Thinkorswim is amazing as far as charting, customer support. They answer the phone really quickly. Great support, very knowledgeable people. For options trading, maybe some of the other platforms would be better. And I do the options trading on my phone, but I'm going to keep taking your feedback as we go through this session and the upcoming 3-day event. But yeah, I use Thinkorswim. Seems like Tasty Trade's a good one too. FOMO. All right, anyone want to take a guess? That's the #1 reason traders fail, FOMO. More specific. So what on the chart makes them fail? Okay, yeah. Yeah, Thinkorswim Pretty simple. I feel like each one has their pros and cons. Let's see, Dirk says, I would not trade due to the long wicks. Makes me hesitant as it is not a clear close. As it is not a clear close downward, I would go for the upside. Second guessing, yeah. So if you're kind of going through your head and you're thinking, well, maybe we're in an uptrend, we've got a 2-candle flip. Is this a zone I want to buy or not? Too much weight on the past. Greed's the number one reason. Greed. Yeah, for sure. Definitely greed. I mean, these are all great answers. Greed, FOMO. But what on the chart specifically? So you guys are saying more emotions. What on the chart makes traders fail? Second guessing, too much weight. I'm saying buy on the retrace, not sticking to strategy. Buying at the top. Great answers. So the number one reason, and this is from just closer, not observing the left price action. Warmer. So I'll give you a hint. This zone is going to get stopped out. And this is, I think, a recent one on gold where price broke through that. Now, what's the issue with this zone? I mean, it's a great zone, right? It's a 2-candle flip. You have a breakout. You have a gap. It had a long move away. We're in an uptrend. You could even say it's in a prior zone, fake out, breakout. If you've been in the previous classes, we have all the odds enhancers here, right? So kind of the ones we've talked about in the past is we have fake out, breakout where it broke support. And then it broke out to the upside. We've got a 2-candle flip. That 2-candle flip had a strong breakout. It gapped up. It's in a prior 2-candle flip over here. We're in an uptrend. It has pretty much everything that we could be looking for. Trading not great zones getting closer now. And why? Why would this not be a great zone? I mean, it has all the criteria, so what makes this ultimately not a great zone? Trading against trend, closer. Nice job, Kevin. So the number one reason, again, this is from working with a lot of coaching students in live trading room, just seeing you guys day in, day out. Number one reason why traders fail is we're looking too far left. So kind of what Kevin was saying, it kind of combines everything that you guys are mentioning, but ultimately the reason is we're trying to gather way too much information by looking left. We can find the perfect zone. It meets all the criteria. It has a breakout. It's a zone. Maybe it's a drop-based rally. It has a gap. It can meet every single criteria and it's still going to fail. Why is that? It's because it happened too long ago. So a lot of the zones that have happened in the past are not going to be great zones. And this is the number one reason why I've seen traders fail is because we're choosing zones and we're leaving them on our charts, even though this zone, how many days passed when price came back to that zone? That zone was made here. And then 1, 2, 3, 4, 5, 6, 7 days later, we're back to that zone. 7 days in the markets, there could be all new news announcements. There could be all new things on gold coming out. Market conditions could be different. And we're choosing a zone from a week ago. It doesn't make sense. So the solution, only trade what's going on today. So if I come back to this and we're looking at this zone, what's on the other side of that zone? We've got a zone here, but what do we have right up above? There we go, Tom. So we've got a wick over wick here. If we're trying to figure out what's happening today, we need to really just pay attention to the most recent, I tell students, most recent 2 candles, most recent 3 candles. If we're going back 1 week, 2 weeks, 3 weeks, a lot of that data is becoming so old that those zones you're taking, even though they might be great, and I get it, you don't want to clear off your charts and all the work you've done to your zones, but the students that tend to work the most are the ones that get rid of their zones and really just pay attention to what's going on real time. And Tom mentioned we've got a wick over wick here. That's saying the sellers are in control. Just because there's a zone from a week ago doesn't mean we should take it if the sellers are what's happening today. So looking too far left, the solution, only trade what's going on today. I can't stress that enough because then after that down move, well, now we've got is that a 2 candle flip, I think? Red candle, green candle, 2 candle flip. That tells us look to go long. Now we're trading it real time, day by day, taking that breakout. And you can see here the numbers on the right, 30, 50 to over 3,100, 50 points on gold. If we just wait for the signal or the confirmation, the 2 candle flip, what's 50 points on gold if we waited for the 2 candle flip and took it to the upside? 50 points. And how much per point? Does anyone know the point value of gold? Thank you, Lon. $100 per point. So each point on gold for the full size contract is going to be $100. Just this one day, if you just took the breakout here, $5,000 move. You're not picking bottoms. You're not choosing a zone from a week ago. You're trading with what's happening real time. Absolutely. Michael, you said it. Love what Michael said, and I couldn't say it any better. With what is happening with Trump, again, the tariffs, we're pausing the tariffs. One must stay recent. There is no other rational choice. 100%. So when Michael's saying stay recent, that means focusing in on what's the setup today? What are the most recent 2 candles? And just focusing in on that. Because if you can master that and you can take a trade each day, that's going to improve your trading significantly. The issue is that we are looking too far left. We're trying to understand every bit of information and the whole picture of what's been going on with gold since back in January, but we can't even take a trade today. So we're going to change that during the upcoming 3-day boot camp. I'm so excited. I'm going to be going into my step-by-step system for trading in these volatile markets. So the event is going to be April 22nd, 23rd, and 24th from 2 to 4 p.m. Eastern. For you guys in here now, I'm going to be giving that special offer price of $199. You'll see it everywhere else for $299. But when you use the link in the chat, just as a thank you guys for being here in the room with me, being in the showcase and answering, I appreciate you guys. So I'm going to give you that special offer of $199. 3-day event, 2 hours each day. It's going to be the bull market boot camp, and we're going to be going into all of the details that we talked about today. You know, the market's going up 10%, learn those tools of how to buy. It's going to go back to our 3 strategies. Zones, qualifying them, which ones are the best, breakout trades, what's the right location for a breakout, or is there a lot of volatility? We should be trading options. Then you have the whole repertoire of being able to understand the markets and pick the best strategy that fits what's going on each day. So you'll be able to look at a price chart and say, today I should be trading a breakout, or today I should be trading a zone. Today, as you mentioned, those premiums on the equity indexes, probably not that high because we're down 0.3%. So if we're looking at this right now, probably not a day to be selling options because the premiums aren't that high. But again, those quiz questions, I would say most of us got them wrong for the zones and for the breakouts. And going back to them, these are important. You'll get the recording. It'll be posted on YouTube, but this 2 candle flip, breakout. You can see the difference now. The number one reason why traders get stopped out. Here's bonds, similar situation to what we were looking at on gold. This zone was formed 1, 2, 3, 4, 5, 6 days prior. So now a week later, we're trying to take a zone on bonds, but things are completely different. The markets have changed. And I'll give you those tools of why this is also not a good zone based on this candle here. There's some details in this. If we dig into this picture here of how to understand when to take this short and not to trade this zone, and how to find the best entry point on moves like this. It's going to be really cool. See, I like that. Thought of looking too far left. If you're a day trader, yes, exactly. Thanks, Richard. Have a great one. Thanks for the feedback. Yeah, if you're looking too far left, I'm telling you, it's gonna work against you. And this is for swing traders too. It's not just day traders, swing traders as well. If you're looking to stay in these trades for 1 week, 2 weeks, or even just a couple days, maybe to start out, we need to understand which zones are the best ones to be taking. So again, if you're a swing trader and you're looking to buy on bonds because we're in an uptrend, you might not be picking the best entry point. It's going to be going against you for a long time. And I have seen this time and time again. I feel bad for the students who hold on to trades and they don't put a stop loss in, and then they try to kind of stick to their position. And all it is just kind of restructuring how we think of things and seeing the price charts in a different way to say, this isn't a zone. I'll give you another hint here. There's actually a zone right here. Let me see if that's where it stopped on the next one. If you've been in some of my one-on-one coaching before, I think you'll understand why this was the zone here, even though it just looks like one big red candle. There's actually a zone right there. And for that, it's going to have to do with looking left. So for the upcoming 3-day boot camp, again, I'm really excited to have you all here. If you were excited about what happened today, get ready for the next event. As a bonus, so when you sign up using the link in the chat that I just posted, you will get one of the previous coaching events as well, the recordings from them. So I've listed them here. Why I'm doing this is to give you kind of a leg up, because this upcoming bull market boot camp is going to be the most advanced one yet, and really just putting everything out there and putting all the pieces together. So because of that, I want to give you guys some kind of prep work, including one of the previous coaching events as well. The first coaching event, we focused on a step-by-step market analysis. Someone mentioned needing help with the top-down analysis. That would be the first coaching event. Step-by-step market analysis for maneuvering high time frames and low time frames. Long-running trades, multiple contracts, targets, and opposing zones. The second one, we talked about odds enhancers. We created a checklist, top trades to avoid, entry points. We talked about the heat map. And then the most recent one was the bear market boot camp. So I would say this one is going to be the most current because the markets have been dropping. Trading during volatile times, what to do and what not to do. We talked about the double-sided breakout. That was a new one. The inside doji candles, moving averages, hidden zones, seasonal trades, and that bear market checklist. So when you register, again, using that link in the chat, you'll get one of these events included. I would recommend everyone, once you register, watch those recordings from the previous event just to get you a leg up for the upcoming event. Awesome. Looking forward to having you there, Dirk. When you register, send me an email of which coaching event sticks out to you. I'll put this in the follow-up email, but let me know which recordings you want based on what topics you're most interested in. I'll send you those recordings and then make sure to watch them prior to the upcoming 3-day event. Yes, let me put my email in the chat. It's going to be tradingcoach@KaitTrade's.com. And I will put that in the follow-up email as well. You'll see that. But in case you're not getting the emails from me, it's going to be tradingcoach@KaitTrade's.com. You bet, James. Any questions? It's going to be probably the best boot camp yet. And that's why I'm giving you guys kind of this prior recording to give you a leg up. Thanks, Patrick. Have a great weekend. And yeah, just kind of think back. The recording will be posted on YouTube. It'll be public, so you can feel free to refer back to it. But some of these things, if you're struggling with zones, if you're getting stopped out on zones, if you're taking breakout trades and they're short-lived and you're looking for longer-lived breakouts, or if you're interested in options, we're going to be covering all that during the upcoming 3-day bull market boot camp. You bet, Chuck. All right. If you have any questions, email me. Other than that, that's all I've got for you guys. So have a great weekend, everyone. Happy Friday. Thank you all for being here and spending it with me on this lovely Friday. Have a great weekend, everyone. I'll see you all during the upcoming bull market boot camp. Again, that's going to be April 22nd, 23rd, and 24th from 2 to 4 p.m. Eastern. And you will get the recordings for that as well in case you can't attend. Thanks, guys. Thanks, Mo, Dwayne, Callie. Great job on the quizzes, Callie. Have a great day, everyone. Bye-bye. Thanks, Dirk. Bye, Lon.